if you were to make a bifurcation between asset classes, all right, if somebody is not putting money in a multi-asset fund, but choosing to allocate individually, what do you think is the right allocation between equities, debt, commodities, maybe even global equities, presuming that at some point of time you guys will be allowed to start investing again?
So I could not have got a better question than this.
Okay.
We have launched something called as a passive multi-asset fund. Passive multi-asset fund. I have the choice of investing in Indian equity. I have the choice of investing in foreign equity. I have the choice of investing into debt. So there is a lot of flexibility that I have got across asset classes, and I invest in those ETFs. Passive multi-asset fund, the name says it all. So it gives a tremendous amount of flexibility based on the levels of the market. So today we have invested around 50% between equity and international markets. So around 30% plus is in equity markets in India. Around 20% is in internationally. My numbers will be somewhat, they are not accurate, but around 50% is into India and foreign equity. Around 38% is into debt. So there are various asset classes. You can invest in gold in that. So some part of it would have gone into gold. So today is the time to give flexibility to the fund manager over the next 2 to 3 years that invest across asset classes, and that flexibility is also available within fund of funds. So fund of funds is coming out as a very, very important category. Earlier, you used to toggle in a thing like asset allocator fund. We used to toggle between equity and debt. Now I have the choice of toggling between international equity, Indian equity, gold, debt. So it is giving a complete flexibility to the fund manager where he wants to allocate. And it is very clear in our passive asset management fund, and the fact sheet will be out tomorrow because 31st March disclosures will come tomorrow, and you can see how we have distributed amongst various asset classes.
Interesting. But moti, you reckon that 50% into equities, 50% into out of the remaining 50%, some into debt, some into commodities is a good allocation.
So international equity, because the state at which Indian markets are, see, Indian markets are 80% premium to MSCI today. So the rest of emerging market is quite cheap. Rest of Asia is quite cheap. If our forward PE is at 20, for MSCI the forward PE is 11. So it is not necessary today. Today it is a thing is in diversifying across countries. Why should we be putting entire money into India itself where other countries are available relatively cheaper?
Sure, point well taken.
So, so that is why I feel that passive multi-asset fund is a very good category.
Yeah.
So what we have done during the year is we have created a series of products that where you can do asset allocation the way in a very tax-friendly manner. Asset allocation is possible. So fund of funds, your viewers should understand fund of fund categories very well. It will require basic common sense. You don't have to be a financial wizard to understand fund of funds. You will see where the fund manager is allocating the monies, right? So that's where the spread is between, and we should remember that interest rates are rising. So debt markets are not also very easy to invest in this one. So when people are wanting to park money for a shorter period, also we say floater interest rate is the best possible. In a rising interest rate scenario where you do not have a clear duration call, it is very important to invest in floater interest rates, right? So in debt funds, we have got a scheme called ICICI Prudential floating interest rates, right? So that is a very interesting period today in the scenario that we are in. It might be the right place to invest.
Got it. You preempted my question. I was going to ask you that since it's a year of interest rate rises, would you reckon that that's the
so floating? I think amongst the debt category, one has to be very alert and be only with floating interest rate type instruments.